Note on leveraging India's digital public infrastructure, lessons for global adoption. And let me tell you that this keynote session features two stalwarts, two leaders who have truly ensured that their transformational leadership style has truly paved the way for the growth trajectory of India. Ladies and gentlemen, first up, we have with us Shri Padmanabhan, former Executive Director, Reserve Bank of India, and ex-Chairman, Bank of India. And this evening, we have the august presence of none other than Shri Rabi Sankar, Deputy Governor, Reserve Bank of India. Can we please have a huge round of applause to welcome Shri Rabi Sankar to the Fintech Fest for this phenomenal edition. And we request Shri Padmanabhan, sir, to also spearhead this keynote at the Global Fintech Fest 2024.
Good evening. This year, it is my pleasure once again and privilege to introduce Deputy Governor Rabi Sankar. In a way, it's a challenge because last year I did the same thing. And I had also told you, which continues to be true this year too, that he holds charge of all the important departments which are relevant, at least from the perspective of this great event. Payment systems, technology, foreign exchange, you name it, and he is in charge. Now, I know Rabi for over last 3 decades, so let me get a little bit mischievous. So when I was thinking how to introduce him, I thought the easiest way of doing this is, here is Rabi Sankar. I introduced him last year. This year he is 1 year older. And maybe, or certainly, being the DG of a central bank, he is 5 years wiser. Because every year, the kind of challenges faced by the central bank is 5 years wiser. Now let me get more formal. Now, what I would like to highlight is that he is the quintessential central banker. I don't mean it in the conventional sense of being conservative. He is least so. DG Sankar has demonstrated that for a central bank in an emerging economy like India, it is equally important that the central bank recognizes when it is time to change, once the environment has changed, and discard the paradigms that are past their expiry date. And he does it, and it is important that you do it well in time before it's too late. Now, Rabi Sankar has been precisely practicing this. Now, for example, several key decisions taken by the RBI in the foreign exchange markets in the recent years were piloted by him. DG Sankar also played a very important role in upholding the RBI's policy sovereignty against considerable pressure from the prevailing mindset. He is a visionary central banker, and under his guidance, the payment system in this country has been undergoing a phenomenal transformation. Now, he has been highly supportive of India's growing fintech sector and has engaged with many of us in a free and frank manner. Mr. Rabi Sankar, it's a pleasure to introduce you once again, and we are all eager to listen to you. Over to you.
Good afternoon. Thank you for that introduction, Mr. Padmanabhan. I think last year I started off talking by saying that Mr. Padmanabhan was one of those very few officers in the Reserve Bank of India all of us in our generation looked up to and tried to emulate many of his qualities. Now that, as he says, I'm 1 year older, I think I realize now, even more than last time, that he is the sort of officer we need in the Reserve Bank of India. If Reserve Bank of India has to adjust with the times, has to be responsive to the needs of the economy and the market, and has a ear very close to the pulse of the market. Thank you very much. We were all coming back, Mr. Gopal Krishnan, I and us, we were just coming off a global fintech, our own version of the global fintech festival. We were having a global conference on, involving mainly central bankers from outside, but local fintech industry as well, in Bengaluru as part of our commemoration events of RBI's 90th year. This is RBI's 90th year. So I expected to see a lot of faces who were there. I see some of them here as well. So this entire week has been technology heavy as far as we in the Reserve Bank are concerned. Good to see that the energy level is still very much there. As we were walking up to this room, Mr. Gopal Krishnan told me that what appeals to me most about this place is the energy that people have. He's right. I was just reading somewhere recently that fintech entities are extremely optimistic people. That probably goes with the fact that they have this kind of an energy. In fact, I sometimes wonder, why do you have to call so many regulators to speak so often in a gathering like this? Regulators tend to be, more realistic than optimistic. But probably you also need a bit of a dose of realism to be able to carry on with your enthusiasm. Over to the formal talk. So it's good to be back in this 5th edition of the Global Fintech Festival. This festival ranks now among one of the top events in the world. And I don't mean in terms of footfalls or anything. I mean in terms of everything, in terms of participation, in terms of the range of technologies that are on display, in terms of in terms of the breadth of countries that participate here. In terms of all of that, it's an event that counts along with the best in the world. And its increasing popularity over the years mirrors the growing importance of India's IT industry. When I was here last year, I shared my thoughts on the role a self-regulatory organization, SRO, could play in the growth of the fintech sector by establishing codes, standards, voluntary compliance mechanisms, ensuring growth while minimizing potential risks and negative outcomes. You are all aware that yesterday, RBI granted recognition to the first SRO in the fintech sector. Expectations are very high from industry participants, from consumers, from regulators. But I remain confident that the SROs will live up to these expectations and lead the way for a credible and sustainable fintech ecosystem. The SRO framework document released by RBI in May 2024 outlines the functions and responsibilities of an SRO related to standard setting and oversight, enforcement, and so on. What I will try and talk about today are some key issues which I think SROs could consider giving particular attention to. But before I do that, let me start off on something that is extremely positive, which is that I need to emphasize that fintechs, or another way of referring to them is technology innovators, are and will continue to transform the financial ecosystem. What we have witnessed so far, I believe, is but the tip of the iceberg. India's commitment to fintechs, to innovators in the financial sector, is very clear from what I might refer to as the India model of digitization. And what is the India model of digitization? You have heard about this. You have heard about bits and pieces of this, maybe not exactly in these words, which is simply this, which is that in India, we create the basic infrastructure, the digital public infrastructure, DPI, in the public sector, make access to this infrastructure open to the private sector, so that private sector can innovate, create products that customers need, and equally importantly, be able to take these products to the nooks and corners of this country. We all know why private sector is not ideally placed to create digital infrastructure as such. So it's quite understandable why the public sector would create it. But we also need to recognize that the public sector, not the regulator or the government or entities created at their initiative, are not as effective in the spread of technology, are not as effective in innovation as the private sector is. That recognition underpins the India model of digitization. While the digital public infrastructure will continue to be created, public goods will continue to be created in the public sector, private sector will continue to play a more and more important role in the area of innovation. So as far as we see, fintech industry in India is just in the early stages of its development. Last year, again I remember in this conference, I was referring to the number of UPI transactions and saying how good a progress it has made. At that point of time, if I remember right, daily transactions were roughly in the area of 340 million. Now they have gone up to more than 460 million. Payments are doing well. There are many new instruments that have come in. CBDCs are picking up, and I'm sure with the clear use cases that are going to be established by programmable tokens, programmable CBDCs, this segment of the market can become as liquid or as heavy as any other segment. So the possibility for growth remains for the fintech sector. Even if you go back to UPI, if you look at the 460 million transactions, it virtually works out to about 0.3 transactions per head per day. Is there scope for more? Very clearly. In fact, international experience gives us a scope, gives us a sense of that. If you look at, for example, M-Pesa, you would see that the transactions per head per day is upwards of 1.5. So the possibility of digital transactions in a vibrant economy like India going above that is very much there. We just have to move towards it. This is another indication that the scope for growth exists substantially. This is also borne out by a survey Reserve Bank had done in 2022, towards the end of 2022, which showed that only a little above 40% of the people at that point in time had ever used a digital transaction. In fact, just about 20, I think it was about 23% of people surveyed said that they use digital transactions regularly. Now, this is another indication that there is scope for growth in these transactions by another 75%. So while we have taken long strides in digitization, the possibility for the future remains very optimistic, and that is probably one of the reasons why there is so much of enthusiasm, there is so much of energy in this FinTech conference. And while this growth happens of the FinTech sector, we also realize that the public policy objective of inclusion is consistent with this. As the FinTech sector expands its footprints, as global payments and other digital transactions reach every corner of the country, the public objective of inclusion is also achieved. In that sense, the target, the objective of inclusion itself carries a business case for the FinTech sector. There are similar examples which shows that the possibility of growth for the sector exists. Now, how can we ensure that the sector moves? Sector progresses, sector grows, the FinTech sector grows in a manner that is responsible, that invokes trust of consumers, of regulators, of everyone, of the system, and ensures that it meets not only its own business targets, but also simultaneously the social objectives that go with it. It's a difficult task, because financial sector entities like banks, NBFCs, mutual funds, to a good extent, they derive trust, or they get the trust of users from the fact that they are licensed, they are regulated. Now, FinTech sector, for the large part, are not licensed by a regulator, not regulated. This makes it all the more challenging for them to demonstrate that they behave responsibly and invoke public trust. Another factor that gets trust is history. Compared to normal financial sector entities, FinTechs have not yet created enough of a track record that enables an evaluation of how trustworthy an entity is. This is something that is built over time. This is something that requires that over a period of time, the entity or the industry continuously and consistently behaves in a manner that evokes trust. And in this, the SRO of the industry board, or SRO or SROs, will have to play a leading role. An SRO should work consciously and consistently to create conditions that are favorable to competition. There are a few things that an SRO needs to particularly focus on, and one of them is this, that it needs to work consistently to create conditions that are favorable to competition. Competition is essential to make markets effective and efficient. An important indicator of market integrity is price efficiency. And one of the two major assets of the fintech industry is cheaper cost. The other is faster delivery. Now, this cost efficiency should be driven by technology, not by an ability to withstand losses. New technology, understandably, has business strategies that are radically different from traditional businesses. But the industry has to ensure, and therefore the SRO has to drive the industry to ensure that such strategies do not keep out competition, which eventually stifles innovation. Another thing that should be high on the to-do list of SROs should be to avoid questionable practices. SROs can play a role, similarly, in removing inefficiency in existing financial markets through use of technology. One of the key issues being globally discussed now is about how to achieve the efficiency we have seen in domestic payment systems, how to achieve the same efficiency in cross-border systems. And it is fairly clear from the global discussions that are taking place that the solution has to involve, eventually, systems that go beyond the existing infrastructure that exists, which indicates that we have to have participants other than banks. We have to have technologies other than those that exist today. And we have to have processes that are different from the typical correspondent banking system that exists if we have to achieve these efficiencies. Many of these inefficiency exists because there is no right technology, and removing such efficiencies therefore falls on fintechs, and an SRO of fintechs should be able to guide the sector towards identifying such efficiencies and removing them. A third issue that SROs need to focus on is delivering value to consumers, that the sector delivers value to the consumers. The basic reasons fintechs have played the role of a positive disruptive force has always been this, that they deliver value to the customer. At the same time, many practices have emerged. All of you are aware of it. For example, dark patterns that the fintech industry has to consciously move away from. And an SRO is best placed to identify such practices early and sensitize the industry. Many of these practices may not be very obvious. Some of these practices might even be justified as delivering value to customers. It is up to the SROs to be alert in identifying the good, positive practices from those that are avoidable and taking the industry away from such practices. Another issue that comes is pricing. Economists have studied the idea for quite some time. The value of anything, any good or any service, is tied to the conditions in which these goods and services are produced. Value shaped the prices of goods and services. But this thinking has gradually changed over the years. Very often, you can come across the practice of belief that the price paid in the market determines the value. This shift from value determining price to price determining value has led to a lot of consequences in economies around the world, not all of them beneficial from an economic welfare standpoint. I think it is for an SRO to urge the fintech sector not to lose sight of the fact that earning trust would necessarily involve treating the customers fairly. And treating the customers fairly includes not just fair pricing, but also pre-sales and post-sales interactions. Of particular importance is the need to provide products that meet genuine and socially productive needs of customers. Pre-sales communications, for example, advertising, needs to be truthful, needs to avoid misleading the consumer. The first line of defense to ensure this should be an SRO. Fintechs also need to be alert to social and macroeconomic interests and priorities and not subsume them to business interest. It's only an SRO that can inculcate such a culture. The mantra should be take advantage of the technology, do business honestly and with integrity, and ensure that the customer is not shortchanged in the process. One major function that an SRO is intended to do is facilitate honest two-way communication between the regulators and the industry. Regulators would rely on the assessment of an SRO for effective feedback. We do that regularly in the financial sector. SROs in the fintech sector would basically have to take up that role for the fintech industry. Sometimes regulatory actions require adjustment of existing processes for fintechs, especially where the consideration driving such regulations are customer protection or risk containment. Now, this might understandably lead to some friction from the industry. As an example, a couple of years back, we issued these regulations on payment mandates, or subsequently, regulations on digital lending. Eventually, of course, these things settle down, the industry adjusts, but the process of this adjustment can be smoother, can be quicker, if the industry is sensitized that measures for improving the integrity of the system, measures for improving the protection of the customer, measures intended to reduce the risk in the system would sometimes involve adjustments, inconvenience, but as part of a responsible system being regulated, this is something that we need to do. And an SRO has to make sure that the industry absorbs such a culture. I know these things are not going to be easy. This is something that the industry, the sector, the SROs will learn as they go. Not the least because of the diverse